So with that being said, we're going to get the ball rolling here. I am Angela Fowler, as most of you know, with the Mid-South District. We also have Linda Hagee of the Texas District with us today. Okay, and we are going to tag team this presentation. All right. All righty, so with that, Linda, we'll get going. So those are our email addresses. If you have any questions at all, if you would like to submit any questions, we'll be happy to take those.
And thank you, Angela, and appreciate you working with me to get this presentation developed, and we hope it's a big aid to the congregations who would like to complete the forgiveness, the PPP forgiveness application on their own, which we hope that once you finish this presentation, you'll see that that is very doable. So we'll go ahead and get started. I do have to start off with this, that this following notice is given pursuant to federal tax regulations, that these materials are provided for training purposes only, and the presenters are not providing legal advice or making any statements regarding federal taxes. And these statements were not written or intended to be used and cannot be used by any person as a basis for avoiding federal tax penalties that may be imposed on that person, or to promote, market, or recommend to another party any transaction or matter addressed herein. These materials are not a substitute for authoritative government sources and qualified legal advice. So please seek qualified legal advice if you have any questions in that regard. The one thing that we want to point out is that these materials specifically apply to completing the application for the PPP loan forgiveness. And there was quite a bit of start and stop with the whole application process, but we've been somewhat assured that the application and instructions that were issued on June 16th of 2020 are the final product. And so we're doing this seminar based on those materials, but please be aware that the SBA could announce changes after this date, and so it behooves you to stay on top of those changes and see if they apply to your circumstances. So for example, they've already announced just in this last week an opportunity for early forgiveness, and that's too involved to cover in this seminar. So that would be something, if you're interested in, that you would need to Google or search on your own to see if it applies. So Angela, why don't you go ahead and get us started?
Okay. All righty. Paycheck Protection Program. Eligibility. Church is qualified to participate if in good standing as a 501c3. A faith-based organization that receives a loan will retain its independence, autonomy, right of expression, religious character, and authority over its governance. And no faith-based organization will be excluded from receiving funding because leadership with, membership in, or employment by that organization is limited to persons who share its religious faith and practice. This comes from the SBA faith-based organizations frequently asked questions that you would have received in the email that was sent to you. There's other good information in there as well that, as I said, strictly applies to faith-based organizations. So if you have any questions, the answers can be found in that document. Linda, back to you.
Okay, so let's go ahead and drill down into what's involved in the forgiveness process. First of all, to seek forgiveness, you'll need to apply back through the lender that issued you your loan. So if you want to Google information on this, you look for the PPP Flexibility Act of 2020, and it's also referenced as HR 7010. So you can also see Concordia Plan's website, the COVID special entry that they have there on their webpage. You can also see the treasury.gov website and the sba.gov with the citations there that you follow for details. So loans may be available February 15th through December 31st, but the application deadline is actually June 30th, which is today's date. So be aware of that. And borrowers have until the earlier of 24 weeks from the loan origination or December 31st of 2020 to use the money loaned to them. If the loan was received prior to June 5th, the borrower may elect an 8-week or 24-week forgiveness period. The borrower has up to 10 months from the end of the chosen covered period, so that's the 8-week or the 24-week, and that's if applicable. So those that receive their loan prior to June 5th have this choice. So you have 10 months up to the end of the covered period to apply for forgiveness. If a borrower fails to apply for forgiveness within 10 months after the last day of the covered period, the loan recipient must make payments of principal, interest, and fees beginning at the onset of the 10-month mark. We also want to note that in the application itself and the instructions, anything that refers to owners, you just disregard, since that does not apply to churches and schools. And Angela, why don't you take the next bit of information?
Absolutely. All righty. Updated interim final rules. The period for loan repayment has been extended to 5 years. For those portions of the loan not forgiven, the loan repayment deferral period has been extended up to 1 year without payments. The payroll cost for the full amount of the PPP loan to be eligible for forgiveness decreased from 75% to 60%. The rule is at least 60% of the loan proceeds shall be used for payroll costs, but not for forgiveness purposes. This means employers can now get up to 40% forgiven based on what is spent for non-payroll costs, such as rent, mortgage interest, and utilities. Okay.
And
The deferred, if I could just point out one thing, the deferred payment extended to date, to the date the SBA sends the borrower's loan forgiveness to the lender. Basically, the lender has 60 days from receiving the application for loan forgiveness to issue a decision. So you have until that time before you have to make any payments. Okay, and I'll turn it back over to you, Linda.
Okay. There are several safe harbor provisions that have been included, and so you definitely want to check these out. So employers have until December 31st of 2020, rather than the originally announced June 30th, to rehire employees and to restore salaries back to their February 15th, 2020 levels to avoid being penalized on the forgiveness amount. Loan payments are deferred until the amount of forgiveness is established. To help with cash flow, organizations who received PPP forgiveness can also defer payroll taxes, and this was previously prohibited. So that might be a benefit to your organization, but I would caution you that that's incurring more debt. So just be very careful with the payroll taxes. And the 941 format was changed to accommodate this payroll tax deferral. But this subject is so complex, it's not covered in this presentation. So you'll have to do your research on that particular point. So the amount of loan forgiveness can be up to the full principal amount of the loan plus accrued interest. Angela?
Okay. Begin with the end in mind. What information do you need to gather for your PPP file? Now keep in mind, this is information that you need to gather to start completing the application. Okay, you need the SBA PPP loan number, the PPP loan amount, the PPP loan disbursement date, basically the date that you received the proceeds, the number of employees at the time you made loan application. the number of employees at the time of forgiveness application. That means the time when you say you're completing the forgiveness application today, how many employees do you have today? You need to show calculations and totals and show the FTE comparison. We will walk you through that as we go through our sample. Linda.
So you'll collect this information for the covered period, and we'll talk about that. That's your 8 or 24-week period to calculate your forgiveness value. So what you'll need is these documents: the salary, wages, and other compensation information, payments for paid time off, leave, or vacation, payments for group health insurance, so you got to grab your Concordia Health Plan bill, payments for retirement benefits, so again, your Concordia Health bill, your mortgage and interest payments. And just note here, the caveat is that your mortgage contract must have been entered into prior to February 15th of 2020. Or your rent or lease payments, again, a contract that was entered into prior to February 15th of 2020, and your utility payments. And the utility payments have been defined by what is deductible on the regular 1040 Schedule C. And those particular items are heat, lights, power, telephone service, water, sewage, and internet access. Angela?
Okay. Covered period versus alternative covered period. This is really important. If the loan was received prior to June 5th, 2020, you may elect either the 8-week or 24-week forgiveness period. Okay, alternative covered period. This means you can elect the day count to start on the date that you receive the loan proceeds or the first day of the first pay period following disbursement. This is huge because a lot of the feedback that the SBA received was, how is this going to line up with our pay period? How are we going to submit our payroll reports? And for the covered period, it's not going to line up. So this is a huge opportunity to make this easier for the borrowers. If the alternative covered period is elected, use the same exact time span for anything in the application where covered period requested. For administrative convenience, borrowers with a bi-weekly or more frequent payroll schedule may elect to calculate eligible payroll costs using the 8-week or 24-week period that begins on the first day of the first pay period following their PPP loan disbursement. I know that sounds a little bit like a rehash of what we said above. However, this is basically, if you have a bi-weekly or more frequent payroll schedule, you can ignore everything else and you can automatically use the first day of the first pay period following the date that you receive the loan proceeds to start for your covered period. In no event may the alternative payroll covered period extend beyond December 31st, 2020. If you want further clarification on this, you can go to page 1 of the instructions where it'll tell you a little bit more of this in detail. Linda.
Okay, so one of the things that was announced with this Flexibility Act is you have a choice of filling out the 3508 EZ forgiveness form, or you can use the forgiveness application, which we just call the long form application. So how you know whether you qualify for the easy form or not is based on the things on this slide. So you may use the easy form if the following occurred. So the primary factor, the borrower did not reduce salaries or hourly wages of employees by more than 25% during the covered period, and the borrower did not reduce the number of employees or average paid hours during January 1 and the covered period. Or you experienced reductions in business activity due to health directives related to COVID-19, and the borrower did not reduce the salaries or hourly wages of employees by more than 25%. You want to look at the EZ representations and certifications listing on behalf of the borrower, which is on page 2 of the application, or the checklist in the EZ instructions on page 1. There you'll see that you must certify all of the top elements and one at the bottom. If you're uncertain about which application to do, because you did experience some elements here where you're, gosh, did our FTEs reduce, or salaries reduce, or a headcount reduce, you're going to have to do some calculations. So you're going to see the requirements for documentation. So this is really important to note here. You may want to use some of the table formats from the long form, even if you think you're going to be doing the EZ form, especially if you have quite a few employees. So we'll discuss this and why it's important as we move ahead, but I just want to note that the required documents that you must submit with the EZ form follow the instructions of what the folks doing the long form must do. So it kind of behooves you to really pay attention to that particular element. So what we're going to get to in a few minutes is we made up an example of, we call it St. John's Lutheran, example St. John's Lutheran, of a basic applicant for forgiveness using the long form, showing how to fill out the different elements. And from there, you can see what you might need to do to determine if you qualify to fill out the 3508 EZ form. So Angela?
Okay. Documents to submit with Form 3508 EZ application. So please remember, these are the documents that you need to submit with the EZ application. Bank account statements or third-party payroll service provider reports. Now this would be for QuickBooks users. You can run your own payroll reports. Those will be accepted by the SBA, by your lender. Tax forms such as 941 that overlap the covered period and, where applicable, state quarterly business and individual employee wage reports. Now, we included that for state quarterly business and individual employee wage reports. For Tennessee, ignore that. There is no state income tax. You're not going to have any state quarterly business, or I'm sorry, individual employee wage reports. Arkansas, yes, you will. You have a state income tax, so that would be a requirement for you. Account statements documenting amounts paid for health insurance and retirement plans. For CPS people, that would be your CPS statements, Concordia Plan Services. It'll have all the information that you need. Documentation of average number of full-time equivalent employees on payroll on January 1st, 2020, and at the end of the covered period. Non-payroll documentation, business mortgage payments. You'll want to send your copy of lender amortization schedule and receipts or canceled checks from the covered period, or lender account statements from February 2020 and the months of the covered period through 1 month after the end of the covered period. Business, rent, or lease payments, copy of current lease agreement, and receipts or canceled checks verifying eligible payments from the covered period, or lesser account statements from February 2020 and from the covered period through 1 month after the end of the covered period. Business utility payments, copy of invoices from February 2020 and those paid during the covered period and receipts, canceled checks, or account statements verifying payments. This can also be found on page 6 of the instructions for Form 3508EZ if you want any further clarification. My experience has been when you're submitting information to the government for them to review, always better to err on the side of sending too much information instead of not enough. So if you have the canceled checks, please send them along with any other schedules or bills that you have. Linda.
Okay, it's important to note that when you do the standard loan forgiveness, or the long form, as we like to call it, you're going to need the same documentation as was listed that Angela just covered for the EZ form, but you need this additional documentation. So you're going to need to do your full-time equivalent documentation showing the average number of FTE employees on payroll per week between February 15th of 2019 and June 30th of 2019. The average number of FTE employees on payroll per week employed by the borrower between January 1 and February 29 of 2020. Or in the case of a seasonal employer, the average number of FTE employees on payroll per week employed by the borrower between February 15th of 19 through June 30th of 19. Between January 1, 20 and February 29, 20, or any consecutive 12-week period between May 1 of 2019 and September 15th of 2019. In this presentation, just so you know, we don't spend a lot of time discussing the implications of being a seasonal employer. But if you follow along, this application, the easy example that we've come up with for the St. John's, you can easily adjust, just apply the date spans for collecting your data per the instructions. So the selected time period must be the same time period selected for purposes of completing the PPP Schedule A, line 11. Documents may include payroll tax filings reported or that will be reported to the IRS. So this is typically Form 941, and state quarterly business and individual employee wage reporting to the relevant state. Documents submitted may cover periods longer than the specific time period. So just note for the state of Texas, we do not do wage reporting to the state of Texas because there is no state income tax. So you only have to worry about the federal. So Angela?
Okay. We're going to move on to the PPP long form loan forgiveness application. What Linda and I thought would be best for those attending the webinar would be to actually break down the application, use a sample church, and deal with each section so it wouldn't be so overwhelming. So, you know, if you are going to use the long form and you experience any problems, for those in the Mid-South District, I'm available to assist you. For those in the Texas District, Linda is available to assist you. So if you have any trouble with this, just know that we are available to assist in any way needed. So with that, we're going to start the application. You're going to list the business legal name. In this instance, it's going to be St. John's Lutheran, the business employee identification number. Then you're going to list the SBA PPP loan number, which you should have on several items that you received for your loan that was processed. The lender PPP loan number, if you have that, fine. It should be on something that you would have signed before you received the proceeds. The PPP loan amount, the actual proceeds that you received, the PPP loan disbursement date, that's the date that the money hits your account, employees at the time of the loan application. So that would be your total full-time / part-time count, employee count. Okay, the same is true for employees at time of forgiveness application. That would be, once again, your total full-time, part-time count, employee count at that date. EIDL advance amount. This would be the economic injury disaster loan. So if you received one of these loans, it would have been available for small businesses or private nonprofit organizations who sustained economic injury and were located in a disaster declared county or contiguous county. If this applied to you and you received a loan, then you have to put the amount there and it will be deducted from your forgiveness amount. You will also need your EIDL application number. Payroll schedule. You will need to select whether you're a weekly, bi-weekly, semi-monthly, the same as twice a month, monthly, or other payroll schedule. Okay, covered period. We elected to use the alternative payroll covered period. So we elected for this sample to use a 24-week period. And we also elected to use, since we're twice a month, we would pay on the 1st and the 15th of each month. So if we received the loan proceeds on April 21st, our next scheduled payroll date would be May 1st. Therefore, our alternative payroll covered period is May 1st through October 15th. Okay, and we have listed there May, June, July, August, September, half of October. So we just note that we're using a half-month consideration for the cost calculations used for October. We also have down here, if borrower together with affiliates receive PPP loans in excess of $2 million, check here. I don't think that will apply to anybody on this webinar. So with that, we'll move Linda back to you.
So when Angela and I were developing the example, we created this checklist of steps. And so what we're going to do is I'm just going to tell you these steps right now, but then we're going to step through each one of these. So just so you know that the first thing that we recommend to do is complete the PPP Schedule A worksheet. So please note here, don't confuse the worksheet with the actual Schedule A form itself. That can be a little bit confusing. So you got to do the worksheet and then you have to do Schedule A itself. So in the worksheet, you want to complete Table 1, and in that we'll discuss how do you calculate FTE. And there's actually 2 approaches that you could take, and we're going to tell you the easiest one. And then you want to complete Table 2 then, and be very considerate when doing Table 2 that there's a compensation adjustment that you need to, that are in the rules and instructions for those that earned over $100,000 in 2019. And then C, you want to look at calculating your FTE reduction safe harbor 2. So we'll discuss that. Then you actually jump in with that data, complete the PPP Schedule A, and then you go to the 3rd step is complete the PPP loan forgiveness calculation form. So with that, why don't you get us started, Angela, with looking at Table 1.
All right, sounds good. Table 1 can be found on page 4 of the actual application. As Linda stated, you jump right into the worksheet to determine the information needed for Schedule A. So with that, what we're going to do on this page is we're going to list employees who were employed by the borrower at any point during the covered period or alternative covered period and who made less than $100,000 per year. Okay, we're going to take the hours worked per individual per week and divide by 40 hours to determine the FTE. Okay, and then you're going to round up to the nearest 10th. Okay, A simplified method would be to assign a 1.0 for employees who work over 40 hours and 0.50 for employees who work fewer than 40 hours. So let's look at our first person here, Bob. He's a 40-hour-a-week employee. And so we have to list the employee identifier is the last four of his social security number, also his cash compensation, the average full-time equivalent. Since he worked in 40-hour week, his would be 1. And then we'll look at the rest of the employees here. Let's go down to one who Mike worked a 30-hour week, Beth a 20-hour week, Sue a 15-hour week. I'm sure everybody understands how to calculate the full-time equivalent on this page. Okay, let's look at the asterisk here. Bob took a pay cut of $4,615. So his revised salary was $60,000 as opposed to the $64,615. Okay, so what we're going to do is take the $60,000 divided by his salary that he did have to get 0.928. Now the instructions are very clear on page 4. On the salary hourly wage reduction column, this is completed only if the wages / salary is reduced by more than 25% during the covered period or alternative covered period. Bob's salary was only reduced by about 7%, so there is a 0 in that column for him. So we do not list anything on that in that column. So basically, you can see at the bottom of the page, you're going to have a box 1 total cash compensation and a box 2 average full-time equivalent. So once you've calculated that, you're going to add up all of that up for a total for box 2 for all employees that made less than or equal to $100,000 for these pay periods. And with that, we'll move on to the next slide, Linda.
And one other little point that I would make on that page, if someone works more than 40 hours, let's say they're salaried and some pastors work 60, 70 hours, they still can only be an average of 1. There's nothing like a 1.2 or 1.3 or anything like that. So just know that salaried is considered full 40 hours, and that's an FTE equivalent of 1. And the reason why we showed the 2 examples here back on that slide is that the instructions say you can take the FTE equivalent out to that, for example, look at Mike. You can show him as a 0.75 equivalent, or you can just round up and actually use the FTE of 1, which we're using the simplified method that shows there on the right under the column called average FTE. So I just wanted to make that clear. If this applies to you, you may want to go ahead and do the work to take it out to the hundredths and round. Now, the reason for that in some of these math calculations, it actually increases your forgiveness amount a little bit. I did the calculation in comparison. So if that applies to you and you have concerns, you might want to go ahead and avoid the, and not do the simplified method. So let's go ahead and go on to this next page, which is table 2. So here you want to list the employees who were employed by the borrower at any point during the covered period or the alternate covered period, whose principal place of residence is in the United States, and who receive compensation from the borrower at an annualized rate of more than $100,000 for any pay period in 2019. So you look back to 2019, if they made more $100,000 in that year, then they go on this table. So for Jim, he's a full-time employee. His cash compensation by the instructions, because he makes over 100,000, the most that can be listed there is $46,154. So his compensation is capped. And the same thing with Diane. Now, this is for the 24-week covered period. If it had been the 8-week covered period, you see the note there that their max entry there is 15,385. So you want to pay particular attention to this requirement. But this is a simple table to do. So you total the cash compensation, get your box 4 total, and then you see in box 5 that you have the equivalent of 2 FTEs. So how you get the total FTE, which will be important later when we look at these instructions, is that you add the FTEs from table 1, which is a 4, the 2 FTEs from table 2, and that gets you 6. So just make a little note where that number comes from. And I believe it's used on the next slide. And so Angela, if you would go ahead and discuss the FTE reduction safe harbor 2.
Absolutely. All right. Okay, this is the, it's Linda stated, FTE reduction safe harbor 2. So if you satisfy any of the 3 criteria, then you would check the appropriate box. Okay, the 3 criteria. Number 1, no reduction in employees or average paid hours. So if you have not reduced the number of employees or the average paid hours of your employees between January 21st, 2020 and the end of the covered period, check here. Okay. The second criteria, FTE reduction safe harbor 1. If you were unable to operate between February 15th, 2020 and the end of the covered period at the same level of business activity as before February 15th, 2020, due to compliance with requirements established or guidance issued between March 1st, 2020 and December 31st, 2020. You can read that for yourself, etc. Then check here. Third criteria, FTE reduction safe harbor 2. If you satisfy FTE reduction safe harbor 2, check here. So basically, if you satisfy any of these 3 criteria, then you can skip lines 11, 12, and 13, put a 1 on line 13, and move on. So Linda and I decided that we would go ahead and complete lines 11, 12, and 13 just to show you in the event that you had to do this as well. So the average full-time equivalent during the borrower's chosen reference period was 6.0. Okay, the total average FTE was 6.0. The FTE reduction quotient, which would have been the line 12 divided by line 11, which is 6 divided by 6, then you would have 1.0. Now, we have on here the option, if we had the if our average FTE was 6.5, and then our for line 11, and then if our total average FTE was 6.0, then our full-time equivalent reduction quotient would be the 0.923. So we wanted to give you both options to show if you'll look back on Schedule A worksheet, which would have been 2 slides before on slide 17, where we had the employee's name. We also had if it was a different average FTE there. So if we had come up with 6.5 as opposed to 6.0, then line 13 would have changed from 1.0, which is no reduction in full-time equivalents, to a slight reduction in full-time equivalents. So we'll turn it back over to Linda.
Yeah, thanks, Angela, for just pointing out that simple examples. That's why we have an avid in parentheses off to the side there, just to show you that 0.923 calculation, because that actually becomes important. That 0.923 becomes a multiplier later in the application and reduces the forgiveness amount. Instead of 100% forgiveness, which we represented by the 1, you only get 0.923 forgiveness. So that's why that's important. Doesn't apply to everybody, but we're just showing it here as a just in case. So let's go on and continue the discussion of the FTE reduction safe harbor 2. Now you have steps 1, 2, 3, 4, and 5. So steps 1 and 2 are just showing reference periods. And I've seen these 2 periods also called look back periods. So when you read up on this, Google it, whatever, it might be called reference period or look back period. But just read the instructions and know you have to calculate the total average FTE between those time periods noted. So the first reference period is February 15th and April 26th of 2020. And then you look at step 2, you'll calculate the FTE for the pay period inclusive of February 15th of 2020. And you follow the same method that was used in step 1. So what that means is, are you rounding? Are you taking it out to the hundredths? Or are you just going to do the rounding that we referenced in table 1, or use the 0.5 and the 1 FTE equivalent? So that's what that means. Whenever you're doing these FTE calculations anywhere, you have to use the same methodology all across the board. And that's very important. Going on this continuation on this slide, step 3, if the entry for step 2 is greater than step 1, proceed to step 4. Otherwise, the FTE reduction safe harbor 2 is not applicable, and the borrower must complete line 13 of the PPP schedule by dividing line 12 by line 11 of that schedule. So that's where you get that example of the 0.923 if that had applied to our particular scenario. But for this scenario, it doesn't apply. So we're going to step 4, enter the borrower's total FTE as of the earlier of December 31st. So that's the 6th. So there was no FTE change. So we get to go to step 5. If the entry for step 4 is greater than or equal to step 2, you enter 1 on line 13 of the PPP Schedule A. So the safe harbor has been satisfied, and we will not have a penalty at all related to our FTE calculation. So with that, we need to move to the PPP Schedule A itself. So we did the worksheet, so now we're going to the Schedule A itself. So Angela, if you get it started on that conversation.
Yes, okay, it's time to plug in information from PPP Schedule A worksheet into the actual PPP Schedule A. So line 1 is going to be your cash compensation. That is going to come from table 1, okay? Next, you'll enter your average full-time equivalent FTE from PPP Schedule A worksheet table 1. Once again, that 4 pulls from that table 1. Line 3, enter the salary hourly wage reduction box 3 from PPP Schedule A worksheet table 1. Okay, remember, we did have a salary reduction. It was Bob who was taking a pay cut. However, we determined the pay cut was not 25% of his average annual salary. It was only 7%. So since it was not applicable, we're going to enter a 0 here. Okay, PPP Schedule A worksheet table 2 totals. This would be table 2 for employees that made more than $100,000 a year. Line 4, enter cash compensation box 4 from PPP Schedule A worksheet. Also, please remember that each employee was limited to a maximum amount of $46,154 for the covered period. Then we had 2 employees, so that number times 2 amounts to your 92,308. Line 5, enter average full-time equivalent from PPP Schedule A worksheet table 2. That's box 5, table 2, 2.0. Okay, non-cash compensation payroll costs during the covered period or the alternative payroll covered period. Total amount paid or incurred by borrower for employee contributions for employee health insurance, $24,000. This would have come from your CPS invoices for the 24-week covered period. So whatever that total is, you would plug it in there. We've got here C Concordia Plan invoice. Then line 7, total amount paid or incurred by borrower for employer contributions to employee retirement plans. You can have C Concordia Plan invoice, and this would include your ER match. So the ER match is going to come through EPSO. That's if your congregation has elected to continue that match for your employees, be sure and include that information. The 14,202 would be comprised of whatever the employer paid for the retirement plan and also the employer match, not anything that the employee paid. So please be sure and keep that in mind, that is not allowed. Line 8, total amount paid or incurred by borrower for employer state and local taxes assessed on employee compensation. That would be for the state of Arkansas, not for the state of Tennessee, not for the state of Texas. Okay, compensation to owners. Remember, we don't have any owners, so that would not be applicable to any of our congregations. Total payroll costs. Line 10, payroll costs, you're going to add lines 1, 4, 6, 7, 8, and 9 for a total of $231,337. And Linda, it's back to you.
Yeah, and you just continue with the form by pulling that total payroll cost and entering it there on line 1. So that's the 231,337. And here you enter your total eligible business mortgage interest payments. So we just made up a number for the St. John. So we said 4,500. We didn't have any business or lease payments, so we entered a 0. And then we made up our utility payment for that time period for the 8,400. And then you see there, what was our salary and hourly wage reduction total? That would be from line 3. And as Angela already stated, that was a 0. So line 6 is we add the amounts on lines 1, 2, 3, and 4, then subtract what was entered on line 5. So the total there, subtracting for the 0, is 244,237. And then our FTE quotient was the 1, because we had worked through that example. And you have your modified total, which you multiply that 1 times the 244,237 to get your total for line 8. Now this is where I just want to point out in the parentheses there that had we not qualified for the 1 for the FTE, and it was in that example of the 6 divided by 6.5, that would have yielded a 0.923 multiplier, and our modified total would have been reduced to 225,431. So that's just in there for you to see as an example. So anyway, our modified total for this St. John's is, again, the 244,237, but look at our PPP loan amount. It's 96,390. So, and again, that was calculated, if you recall, the painful experience of filling out your application on 2.5 months of expenses. But for this forgiveness period, we're using the 24 weeks. So we more than qualified for the forgiveness of the full loan amount. So then you go to line 10, and you're supposed to do this little calculation. It says divide line 1, so go back up to the top to the 231,337 and divide that by 0.6. And you end up with this very large number of 385,561. And what they're doing there is just to say, this is what your total loan could have been. And you enter it there because they're trying to make the entries on line 8, 9, and 10 to be equivalent in comparison. But then they go to, on the forgiveness amount, you can only have a forgiveness amount that equals what was loaned to you. So you enter the smallest, so that we just end up right back at having our total loan balance forgiven. So for this particular example, so you can see that the Flexibility Act that added the option of going to the 24 weeks worth of expenses is phenomenal. So the churches definitely want to take advantage of that and assure themselves 100% forgiveness. So Angela, you want to talk about the documents that must be maintained?
Sure. Okay. Documents that must be maintained but not submitted for Form 3508EZ. Now, these are don't confuse this with documents that must be submitted. These are documents that you must maintain. Maintain 6 years after date of forgiveness or the loan has been repaid in full. Documentation supporting certification of annual salaries or hourly wages between January 1st and March 31st, 2020, and documentation of salary/hourly wages during covered period, those that have not been reduced more than 25%. Documentation of job offers and refusals, refusal to accept restoration, firings for cause, etc., etc. You can see the instructions on page 4 for further clarification. Documentation that supports that the borrower did not reduce number of employees or average paid hours. If applicable, documentation that borrower was unable to operate between February 15th, 2020 and end of the covered period. Copies of all records related to necessity of loan request, loan forgiveness, materials compliance with PPP requirements. And now Linda is going to discuss documents that must be maintained for the standard loan forgiveness application.
So yeah, these vary just a little bit, so you want to pay particular attention to this. So again, we have the 6-year requirement for maintaining the file, and I recommend that you label it very clearly so that if you're not around to communicate how valuable this file is, at least the handwriting on the form will indicate how long it needs to be maintained. But you need to keep the PPP Schedule A worksheet or its equivalent and the documentation supporting the listing of each employee in the PPP Schedule A worksheet, Table 1, including the salary hourly wage reduction calculation, if necessary, and then documentation supporting the list of each employee in the PPP Schedule A worksheet, Table 2. Specifically, that's each listed employee it received during any single pay period in 2019 compensation at an annualized rate of more than 100,000. And then documentation of job offers, refusals, refusal to accept restorations, firings for cause, et cetera, et cetera. You need to pay, if you have that, I know I've received calls from churches on that, you need to follow the instructions because something that happened as a part of an employee's own actions you are not responsible for, such as them refusing to come So you need to see how to handle that in the instructions. If applicable, you need to have the documentation that the borrower was unable to operate between February 15th and the end of the covered period. And then documentation supporting the PPP Schedule A worksheet, FTE reduction safe harbor 2, and copies of all records related to the necessity of the loan request, loan forgiveness, materials in compliance with the PPP requirements. So that ends our review of the process for filing for forgiveness. And what we wanted to do is Angela's put together just some tips for doing the accounting, because we get a lot of questions on how to actually do the debits and credits for entering the forgivable loan in the GL. So Angela, would you start that conversation?
Absolutely. So basically, we're going to look at the first couple of entries to make sure that you have in fact recorded the proceeds correctly in your general ledger. So you're going to initially record the cash inflow from the PPP loan as a financial liability, and you're going to accrue interest accordingly. So let's keep in mind here, it is not income at this point. Okay, this is a loan that has been extended to you by a financial organization. So it is due and payable if it's not going to be forgiven. So at this point, or at the time that you receive the proceeds, it was a loan. So you need to debit cash, credit, PPP, forgivable, loan payable, okay, to record the receipts of the PPP loan proceeds. And then you need to record interest expense on this loan. Now, if you can wait if you want to see if the loan will be forgiven, you can do that. However, if there is a portion of the loan that's not going to be forgiven, you're going to have to go back and record these interest expense and interest payable entries for each month that you had the loan. So better to go ahead and record accrued interest. You're going to debit interest expense for PPP loan, credit interest payable to set up the payable that will be owed to the lender for the PPP loan. This is basically to record accrued interest. Okay. We'll go to the next slide here. All righty. The loan proceeds should be shown as a financial liability until either the loan is partly or wholly forgiven and the borrower has been legally released, or the borrower pays off the loan. Okay, so let's say in this example that the entire loan was forgiven. So we're going to debit forgivable loan payable, PPP, for the entire amount of $100,000. We're going to debit the payable that you set up by recording interest monthly on this. So it's accrued to the point of $83 in this example. So we're going to debit interest payable to get rid of the payable on the PPP loan that's not owed because it's all been forgiven. And at this point, we're going to recognize this amount as unrestricted income. Okay, unrestricted income, forgiven PPP loan. We recognize the amount of the loan, and the interest is also being forgiven in this example. So the proceeds plus the interest is all income to your congregation. So this is basically to record the forgiveness of principal and interest associated with the PPP loan program. Remember, please, you cannot recognize this as income until it has been forgiven. That's probably the most important thing right now, and appears to be the biggest issue, I think, with recording with several congregations. For right now, until it's been forgiven, it is a loan. At the point at which you have received forgiveness from the lender, who in turn would have received it from the SBA, then you can recognize it as income. Okay. One more thing I think I'd like to point out, if I could, Linda, just quickly. Linda and I elected to do the long form because we felt like we would do the most difficult maybe situation here. We're hoping that if your situation, you did not reduce salaries or wages of your employees by more than 25%, and you didn't reduce the number of hours of your employees, that you will be able to complete the EZ application, which will be substantially easier than the application that we went through, the sample application. Linda, would you like to add anything?
No, that I just want to say that Angela and I are available to consult on any aspect of a congregation. We hope the example was useful. We think the example will probably take care of 90% of any questions that might come up. So obviously won't cover everything. So give us a call. We're here to help you. You can also do some searches at the websites that we noted. But thank you so much for attending our webinar.